All right, what is going on, everybody? Hope you guys are having the best day of your entire life. In this video, I'm gonna break down how I made this $10,000 so you can do the same as well. Now I took three trades, okay, and the three trades were Nvidia, QQQs, and SPX. But these were absolutely banger trades, and I'm sure if I can break this down for you, you will understand the basic concept why we took the trade. And once you understand the basic concept, man, that's all you need for trading. A lot of people think that trading is some hardcore freaking some difficult aspect. It's not. What's difficult is to wait for the setups. It's not difficult to actually take the trades. All right, the difficult part is sitting there and waiting for the freaking trade to come to you and you taking those trades. That's what difficult is. The waiting game is difficult. Taking the trades is not difficult. It's just as simple as that. You see what I'm saying? Now, with that all being said, we are about to break this down. The first trade that I took was on Nvidia. Now, I really want to break down, even before we move forward, I really want to break down this one sweet little thing called when I'm taking the first trade of the day, man, I am like a little kitten. I'm very scared when I'm taking the first trade. Not like scared, maybe is not the best word. I'm very timid. Timid is kind of scared as well. I'm not not even timid. I usually am a little bit more careful when I'm taking the first trade of the day. The reason why, now think about it. If I'm taking the first trade of the day, and let's say if I make $400 on the first trade, right? Now, I don't go into the market thinking I'm happy losing just 2,000. If I lose 2,000, I'm going to walk away. I don't do that stuff. I don't have a walk away limit as such. The limit that I put to myself is I'm going to take the first trade small. And if I'm first trade is Redman, it's way easier for myself to personally come back from a $300 loss than coming back from a $2,000 loss. It's way more easier to come back from this. So I always think of the first trade as like, okay, I'm going to take the trade, but there are chances that the first trade might not work. If it didn't work, I'd rather be red small. Okay. Now, if I'm green on the first trade, I'm going to use that $400 or whatever money that I made, right? Like you, in your case, it might be $50 or $100. I'm going to use that money and I'm going to risk that. Like, think of it like you falling from a high building. And now you rather fall on a concrete, you rather not fall at all. You rather fall on a concrete or you rather fall on a big, like this big thing of like sponge or cotton or whatever. Like this acts as a cushion. You see what I'm saying? So this will be or a net. Net will be like a cushion. So this thing becomes kind of a net for me. So what I'm doing is next trade that I'm taking, I'm doing a little bit. Usually, if I'm green on the day, man, I'm taking usually a little bit bigger position size. Like let's say if I normally do 10 contracts, I'll do 20. Why? Because I'm not, bro. My risk is not like on the day red. My risk is like, okay, this is added as a cushion as well. I have something to land upon. If this trade didn't work, and if I lose, let's say $800 on this particular trade, for example, now I'm not down 800 on the day. I was up 400 before. Now I'm down 400 plus 400 minus 800. That means minus 400. It's way more easier to come back from that again if I take another trade. You see what I'm saying? And this concept is super important. I want everybody watching this video, you need to start doing this, where you take the first trade, small position size, and then use that as a cushion for the next trade. And if that trade is green as well, now you have a bigger cushion. Now you use that, even bigger cushion. And it leads to on a day when things are working. Like there are some days where I think last month I had a day where I made $70,000 in a day. So I didn't make the 70,000 just with one trade. I took a trade, I set up a little cushion. I took a trade, I set up a little cushion. Took a trade, set up a little more cushion. And turned out that was a massive cushion for me to be able to just, and I was in a zone. So the days that you land in a zone, bro, on these specific days, the days that you land in a zone, you will absolutely smash it. And those are the days that you need to show up every day for. Now, nobody makes money every day where you're making 50 grand every day. No, nobody has big profit days every day. Some days, like, yeah, you can say 10,000 is a lot of money. Yes, it is a lot of money, but I don't make 10,000 every day. I make 1,000, 2,000, 3,000, whatever. But the days that I land in a zone, the days I'm just like feeling the market, those are the days that I want to use this cushion technique to just be able to take even bigger and bigger and better trades. And hence, you keep stacking money. You see what I'm saying? Now let's break down the first trade, and this video is going to be small. I don't know how small, maybe 15 minutes. But let's quickly break this down, all right? So I saw this Nvidia moving on a 2-minute chart, and if you check this chart out, check everything out right here, okay? Let me set it up as all charts, reset and change, and we'll go to Nvidia. All right. All right, Nvidia, and you look at this and you tell me that what do you see? Why do you want to trade? Like, this is Nvidia's chart as well, my bad. But you tell me, let's put SPY here. Okay, this is how I was watching the market. And I looked at everything. I'm like, okay, everything is moving up. SPY, QQQs are moving up. Sweet. And Tesla is now relatively weak. Yeah. Microsoft is a little bit being choppy. Sweet. SPY, QQQ is a little bit being choppy, whatever. That while SPY is holding decent value, Tesla is going down. That means if SPY started going towards the downside, Tesla is going to melt. But this was a concept that I had in my head. So I was like, okay,
It's 9 o'clock.
Tesla looks good. And also at the same time, Nvidia looks decent as well. Why? Because Nvidia is pushing. So I'm like, okay, let's see what happens. We made one huge candle again. Now check this out. Would you trade QQQs? No. Why? Because it's been a little choppy. Microsoft choppy. Tesla had this little pullback. I don't like it. It's going back in the range. Also, it's bouncing off a critical level. I don't like it. Now, nothing looks good, but Nvidia, I'm like, Nvidia is moving so nice towards the upside. Let's see if we get a pullback, right? And I'm a sort of trader, I like to wait for pullbacks. And now I was waiting for pullbacks. I'm like, okay, Nvidia is giving me a little pullback. Now Tesla at the same time is setting up decent as well. You see what I'm saying? Tesla is setting up decent. So I'm like, okay, Tesla is looking good. If it breaks below 216 because it's a critical level, we can take the trade, put a stop loss on the other side of this level. Okay, if it breaks below 216. And I was like, okay, Tesla is only one that looks good. And then I was like, okay, Tesla never broke below 216. So I'm like, no problem. But then Nvidia started pulling back a little. Look at that. Nvidia making a decent move. Now check this out. Nothing else looks good here. Nothing else looks good here. All right. QQQs started looking a little bit decent. Why? Because I'll show you in a minute. But let's talk about Nvidia. So now I was like, okay, Nvidia looks good. Let me grab my Fibonacci tool. And I want you to use Fibonacci tool to just see that if we are able, and you want to draw it not from the way you can see now, from the intraday low of the day. Not from here, not from here, not from here, nah. Intraday low of the day. If it's an uptrend, intraday low of the day, all right? Intraday means off the market open, after the market is open, low of the day, to the highest point available. What you basically want to see is you want to see a hold of this area. You want to see the price hold anywhere in this area up before it touches 0.5. Anywhere, if you're holding, sweet. But I don't want it to go down and touch 0.5. The moment it touches 0.5, it's out. Some people say 0.61, and some people are broke. So don't listen to some people, all right? Or most of the people are like 0.61 is a golden ratio, and most of the people are broke. So you do what you want to do, or you listen to who you want to listen to. The moment it touches 0.5, man, the trend starts being super slow. And I promise you, my grandmother can fucking walk faster than me taking a trade at 0.5 bounce. I don't like that. And my grandmother's 90 plus. Anyway. So I'm watching this Nvidia. I'm like, okay, it's holding the range that I wanted to hold, 0.236, 0.382. It's kind of trading on that. All right, this is a level that we had, 140.1-ish level that I had. I'm like, all right, let's see what happens. The next candle literally went up a little bit. It shoot up. It tried to go above it. It couldn't go above it. I'm like, okay, it couldn't. It tried its best. It couldn't. And then in my brain, I'm just like, okay, if I have to take this trade, and now let's say if I'm jumping in long because it's holding my area so nice, if I'm jumping in long, the moment it breaks above this 140-ish area again, I'll put a stop loss right here. My profit target can be just like high of the day, or a profit target can be here, or all-time highs is 141.6 at this stage. I'm like, okay, the first profit target that I have is previous high of the day. All right, so does that make sense for me to risk 43 cents to make 53 cents? Yes. Why? Because my strategy works a lot of times. That means I'm able to take these type of trades. And this is not even a strategy. This is a system, yo. Like, strategies don't work. Strategies change when the market changes. Systems do not change. Why systems don't change? As long as I can see the candles, bro, as long as there's candlesticks, I'll be able to make money. I let every single candlestick tell me a story. And that's exactly what was happening. I saw this. I'm like, okay, that basically what's telling me is price is trying. It's wrapping around this. All right, it's wrapping around this. Think of it like when you're designing, like, because in my house, what I did was for the Christmas, and my missus designed the staircase because on the staircase she designed, and yes, she already put the Christmas stuff up. So um, she designed the staircase with a little round thing that's going around the staircase. Right, the thing to hold on to. It's around, and that's pretty much what's happening in the price section here as well. It's just going around the level. It's wrapping itself up. All right. Now that means buyers and sellers from the top, buyers from the bottom are fighting hard. They're fighting hard. Buyers want to push towards the upside, sellers want to push towards the downside. Look at this. But we have a level right here, 140. All right. If it's able to break above this or this, if it's able to break above this little chop or the coil or whatever you want to call it, if it's able to break above, we can make a decent move towards the upside. That was a kind of a plan that I had in my head. So I'm like, okay, let's see. It broke above. I jumped in calls, sweet, and this is what happened. It actually gave me another entry right here. It gave me another entry. It pulled back, and it pulled back to the 8. Look at this. It pulled back to, I'm in a trade already from here. It pulled back to 0.236 and also 8 exponential moving average, and also it was a previous day level, and it's a confluence. What's confluence? When there's more than one level for you to sit, like more than one level sitting at the same price point, and price is coming down, and there's so many people who can buy. People who trade previous intraday supply bounces or supply turning into demand bounces, they're jumping in. People who trade 8 exponential moving average, they're jumping in. There's also people who trade 0.236 Fibonacci bounces, they're jumping in. There's so many people who are jumping in, and the moment I saw this, I'm like, ooh la la, this could be nice, right? And I'm sitting there, I'm like, okay, let's see if it goes up. And it's kind of playing around a little bit, but then boom, made a huge move up. And now you might be like, bro, why are you on a 2-minute chart? Now, really quickly want to break down time frames that I use. I use 2-minute chart, 5-minute chart, and 10-minute chart on the day. 2-minute chart literally goes from 9:30 Eastern time, or first half an hour of the market open to 10. Then I use 5-minute chart from 10 to 11, and then I use 10-minute chart from 11 o'clock to onwards whenever I'm trading. And this is important because I'll circle back to this. Made a huge move up. This is previous all-time highs, and 10 o'clock hasn't hit yet. This was kind of the moment. Then we hit. Then we went on a 5-minute chart, and this was like still looking decent. Look at this. On a 5-minute chart, I saw this. I'm like, okay, let's see if the Fibonacci's are holding. Previous intraday level is holding. We had the hourly level that I have. These yellow lines are hourly levels. They're holding. I'm like, all right, let's see how it goes. And it made a huge move up again, touched all-time highs. And this was a beautiful trade. And this was a trade that I took. Absolutely beautiful. And this was the first trade of the day, so I didn't do big position size, but this didn't bring in a lot of money, but this did bring in decent chunk of money, and this was the first trade. So that's that. All right, now we go back on a 2-minute chart, and let me break down the QQQ trade that I told you that I took. All right, so the QQQ trades, this was one of the biggest trades on the day, and this absolutely nailed it. Bro, I nailed this trade. Literally, when I say nailed it, I nailed it. Because check this out. I made a video that I posted on Instagram. I post every now and then these videos. I have no idea why the sound is not there. I don't know if you can hear the sound. I don't think so. I have no idea why is the sound not there, yo. Come on, load. Hurry up. Oh man, let me refresh. Get ready for the big moves and the 4 stocks. I don't know why the sound is not there, but hey, this is crucial information for anybody trading options. First name that I'm watching is Nvidia. These levels, exact levels that I'm breaking down, I broke these exact levels down on this video as well. Same trade of QQQs, I broke this down here as well. Same trade on SPY or SPX that I took, I broke this down here as well. Man, a lot of people love sleeping on me, bro, but hey, like at the end of the day, it's your choice. Like, even if you check the comments here, there's some comments like, look at this. Some comments, hey, who makes more money now? Gambling, hey, nice try, hey. Now who makes more money? I make more money than their whole family put together in a day. Now I don't wanna be rude, but it's true. You see what I'm saying? Bro gave all, nah. So you're saying these names, like, look at this, bro. Now, hey, tell them go back to this video and watch. But anyway, I don't care. But let's see. So QQQs, I broke down that on a, what happened was on a bigger scale, we had this beautiful trend line running across, and I broke that down on the Instagram video as well. And I saw this, I'm like, okay, we're still on a 2-minute chart. Let's see if we get a decent entry. And I'm waiting. I'm like, okay, it now started giving me a little pullback. So I went and grabbed my Fibonacci tool. And Fibonacci is something that I use a lot during the day. It kind of tells me if it's actually a pullback or it's going to be a reversal. If it touches 0.5, most of the time it's going to be a reversal. But if it's holding the 0.382, 0.236, I'm like, sweet, this is looking nice, right? I saw this. It was also a pre-market high. Look at this. This is a pre-market high right here. It was also a pre-market high. So there's a confluence of pre-market high break, and we broke the pre-market high. We are bouncing off the pre-market high, which is very nice. We are bouncing off the 0.236 area. There's a confluence here now. You see what I'm saying? There's a huge confluence that I'm watching, and I'm like, okay, let's see if it actually goes towards the upside. See? Then I saw this little candle. I'm like, oh, damn, why this candle has to be in the middle of nowhere? So I'm like, no problem. Yo, no stress. If it breaks above this area again, 0. Because what in my brain, what I'm thinking is now it has touched 0.5. Now, don't take me wrong, yo. It has touched 0.5. Now, what I'm thinking in my brain is, I'm like, okay, if we jump, because I saw the 5-minute chart, I'm like, let me see what was happening on a 5-minute chart. What was happening on a 5-minute chart was we broke. Pay attention. This is super important. This is like, and this is a concept called, you have the rules, but those rules are not so rigid that you're letting those rules take over your trading. I have rules, but I know when to break those rules and when to follow those rules, but all for my benefit. On a 5-minute chart, what I saw was and this whole thing was happening because of the 200 moving average on a 5-minute chart. And 200 moving average on a 5-minute chart is one of the most important indicators that you'll put on your charts. And how to put this on? Go to indicators, search moving average. Okay, search moving average, and you want to look for simple moving average. Where it says simple, right here, you click simple moving average, and then you go to the settings of the simple moving average, literally from the side, and then put the inputs like this. All right, these are my inputs. Make sure it's exactly the same. All right. And then now what's happening here is we are breaking the 200 moving average, and then we are basically, this 200 moving average is acting like, okay, you broke above me and I'm a very critical resistance, and you can go and check in the past how critical is 200 moving average. Look at this massive bounce, right? Or look at this massive bounce, massive, broke below, and most of the time when it actually is able to break below, we go and retest this 200 moving average. And this has happened so many times. Look at this. Big rejection, and then big rejection again. And this is one of those indicators that you need to follow on your charts. Like, look at this big bounce, and then finally broke below, and we had such a huge, insane move towards the downside. And now I'm like, okay, this is 200 moving average running here. We broke above, and it's basically just pushing the stock to come back and retest. And that's exactly what's happening. So I'm like, okay, it touched 0.5, no problem. It's just because the 200 moving average was sitting there, and it's just going back and retesting that critical level. Let me see what's happening. And then I saw this, and I went long. I'm like, all right, sweet, no stress. I'm sitting long. Where's my stop loss? Literally on the other side of this, where I entered, literally on the other side of that candle where my entry is. Bro, I'm talking. I forgot to share my screen. Oh my God. I'm so sorry. Oh my God. Whatever I broke down. I hope everybody understood. I think you need to go simple moving. Oh my God, I feel so bad. I don't have enough time to break down, record the video again. I'm just gonna search moving average. Man, I feel so bad. Moving average. Click on that moving average, and then go to this, and put the star, put the inputs and start like this. All right, and it's basically what's happening on a 5-minute chart. If you see, is we are going back, and this is a 200 moving average. We are going back and retesting this 200 moving average. Go in the past, and we bounced off this so heavy. here we bounced off this so heavy, broke below, retested, moved down. So 200 moving average is one of the most important indicator that you'll put on your charts, and that's exactly what was happening on a 5-minute chart. But I was trading on a 2-minute chart, but I'd never ignore my 5-minute 200 moving average. So when I saw this actual pullback happening and touching 0.5, I knew it was not that the pullback was dirty. It was just because there was 200 moving average being a magnet, because it wants the stock to come back, retest on it, because it just broke above it. So now I'm like, okay, if it breaks above the 0.382, or if it breaks above this particular candle, I go long, no problem. And that's exactly what I did. And now, because I showed you this trend line, I'm like, okay, this trend line is nice. If it break above this trend line, now it started giving me a little pullback. This was important to see a pullback here. My stop loss is on the other side. This was important to see a pullback that reconfirms that this is a trend line. Now, because QQQs has been on a decent uptrend, now I'm just like, if we are able to break above this, like, look at this, it's gonna make a nice move towards the upside. Why? Because once it, like, think about it, I'd rather have it reject, have some people who want to take profits jump out, right, and then move down, and then if it goes again, all the sellers have jumped out already previously. Now that means it's just gonna go, because there's no sellers left anymore. You see what I'm saying? And that's exactly what was going on. It broke above, kind of played around for a little minute, and then it made a huge move up again. And all this time when this was happening, man, it was giving me beautiful entries to enter over and over again. 10 o'clock, I jumped on a 5-minute chart, and check that out. 496 was the level. I said 496, guys, take profits, and over again we did that, bro. There were so many entries, and 496 was the profit target. You can see the yellow line running across, and go check out my Instagram, and I broke this down as well, this whole trade a day before, and that was a trade, and it paid. This was so nice. It paid heavy. I don't even know the percentage. It just made me so much money. I didn't even look at percentage. I don't even know the percentage. It was just, you can tell it's such a huge trade from 494, 0 days to expiration, all the way up to 496, with giving me enough chances to keep adding on to my trade. It's just so nice. All right. Now, then comes the trade SPX. I know I said 15-minute video, man. I'm so sorry. I want to break this down, but now, SPX trade, I saw it break below the 200 moving average. And what did I say? It can bounce. That's cool. But if it breaks below, it can make a nice move down. It can make a nice move down, right? And what we saw was broke below, and hasn't given an entry yet. But I'm like, okay, 11 o'clock about to happen, and I'm gonna trade on a 10-minute chart at 11 o'clock anyway. So I checked the 10-minute chart, and I'm like, okay, look at this, such a nice 200 moving average running across, and now we broke below that. I'm like, this is nice. Let's see if it come back and retest. And it did come back and retest. Look at this. It did come back and retest that. Do you see it? Now, it's never going to be like, oh, yeah, bro, but it was 5 cents apart. Yeah, but look at this. It broke below, retested the 200 moving average. That got my attention. I'm like, oh, my God, this is so nice. Let me just quickly draw my Fibonacci. Fibonacci literally goes from high of this intraday high. All right, this is the high of intraday to here. I'm like, oh, this is literally what's going on in my brain. I'm like, oh my God. It touched the 0.236 area. There's a 200 moving average. There's a confluence, and I'm a sort of trader. I look for confluences, and I'm like, this is so nice. Let me try this, and rest is history. And the rest is history. Boom, 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 boom. And this was a 140% trade, and this was such a nice trade, absolutely beautiful. And literally, this is, bro, imagine you catching a $20 move down, and now a lot of you are gonna be like, yeah, but it's easy to make a video after the fact. But no, bro, I took these trades live with my students. All right, so whatever you say, it don't matter, because I'm the one who made 10 grand. I don't want to sound cocky, but man, I don't know how to, there's some people who just like to talk shit, but I make these videos for people who, that 1% of people who are going to do something about this, right? Now, I don't make these type of videos for everybody. I know there's going to be like 1,000 or 2,000 views on this video, but the person that I make this type of videos is for that 1% of people who are actually going to put in time and actually try to study these type of videos so they can actually level up. You see what I'm saying? Now, that's cool. This is absolutely beautiful. Now, the YouTube algorithm thinks that you will like, I think, the video here, the playlist here, if you want to watch more of my trade recaps. But if you want to actually work with me and actually get you to the next level, bro, join my mentorship, and we have a double the money back guarantee. That means I will make you money. There's a link probably here or here at one side, man, whatever side. Come apply and see if I can help you, and I'll talk to you later. All right, peace. That was it. Let's freaking go.